Hello everyone, my name is Bayan, this is Keep Tax Basic, and today I'm going to be going over S Corp versus LLC. Many people in 2021 have gone from employee to being self-employed and owning a business. So today I'm going to be going over what is an LLC, what is an S Corp, and how it could help you and your business as you grow. A lot of business owners, when they start off, they create an LLC and then file an S election, which sometimes I think that's a little too trigger happy. So let's take a step back and actually go over what is an LLC and what is an S Corp. An LLC is a limited liability company, right? A limited liability company gives you protection for your company. It separates you from the business. So to take another step back, the IRS views you. If you started a business, you wanted to sell pencils. You selling those pencils to somebody without doing anything, you are a sole proprietorship. The IRS looks at you as you started a business, you're selling product for money, you're getting money in return in exchange for you giving your product out. The IRS looks at you as a sole proprietor, which means you would file what we call a Schedule C on your 1040, right? If you do nothing, you would file your Schedule C with your 1040, and that's it, right? That's pretty much the crux of it. So now, you want to protect yourselves so people can come after your own personal assets. So that's why you want to create the LLC, right? I'm not an attorney, so you always want to make sure you consult an attorney in terms of drawing up an LLC agreement and things like that. Now, the LLC is a very, very flexible structure, legal structure. There's so many different things you can do with it. That's why we call it the most flexible out of it. Before I dive deep into what an LLC and the benefits and why it's so flexible, we'll go over the other tax structures. You can be a C Corp, which means you incorporate. You can be a S Corp, which means you can start as a C Corp and then you file what we call an S election. You can be an LP, which is a limited partnership. You can be a GP, which is a general partnership, right? All of those are structures that legally that is also recognized for tax purposes, and you can run your business. The beauty of an LLC, a limited liability company, is you can elect to be different type of tax structures, right? So the LLC is almost a steal because you essentially could be an LLC. And when you decide what you want to do, of course, when you consult your trusted tax advisor and your attorney, you can figure out what the best tax structure is for you. When you form an LLC and you are the only owner of the LLC, it is called a single member LLC. A single member LLC for tax purposes is treated as a sole proprietorship. The IRS looks at you as a disregarded entity, which means that yes, you have a legal entity, but on your tax return, for tax-wise, it's disregarded. And that's if you do nothing, right? So let's go over the next step. Now, let's say you have a partner and you guys create an LLC. That LLC becomes a multi-member LLC. That files its own tax return because it's a business return, right? So now let's take it a step further. Let's say you're on your own or you have a partner and you're like, hey, I've heard this S Corp thing. Let's go through with it. You file an SCorp election, now you're looked at as an S Corporation, which means that you file your own business return and it flows onto your 1040. It gives you a statement that flows onto your 1040, right? So hopefully all this is making sense. I'm going over it high level so we can drive the points across because, again, each tax structure is very complicated. So you always want to talk this over, right? Watching this video gives you something to look at and a foundation that you could start asking the right questions. But it's not all of the answers you need to just go today and go create an LLC. As an LLC, you can also elect to be a C corporation. It's not the most attractive for small business owners. Main reason being is we call it double taxation. Some of my other videos, which I will do in the future, will go over benefits of a C Corp and the disadvantages of a C Corp. You want to be armed with as much knowledge as you can for your business so you can make the right decision. Back to the LLC versus S Corp. The LLC, as you know, just to recap, If you own the LLC and you do nothing, meaning you do not file any type of election, you are looked at as a single member LLC. To the IRS, you are a disregarded entity. So you're a sole proprietor, which means when you file your tax return, you're filing under Schedule C, right? Now, if you want to be an S Corp, you have to make what we call an S election, Form 2553, 2553. Go straight on the IRS site. It gives you the instructions, but essentially what you're doing is you're telling the IRS, hey, I'm no longer a regular LLC. I want to be treated as an S Corp. Legally, you're still an LLC. And I think that's one thing I want everyone to understand. But for tax purposes, you are now an S Corp. You're still a pass-through. Everything, there's no double taxation. You still get most of the benefits that you get as a single member or sole proprietorship, but now you have that extra level of reporting, which separates you, right? You having a separate business return, which is an S Corp return, you're required to file its own return, federal and state, then separates you and the business, right? Yes, the S Corp gives you what we call a K-1 that you then enter onto your 1040, your personal income tax return, and you report that. But now there's 2 levels of reporting, right? And that just helps. So again, just overall general knowledge for you to know as you consider what is the right structure for you as you start or you grow your business. So S Corp election, how is it made? The S Corp election, the requirements per the IRS is it is required to be made in the preceding year of the intended tax year or by the 15th of the 3rd month of the tax after the tax year end. So what does that mean? Let's put that into actual examples. It's 2021. You want to make an S Corp election. The earliest you'd be able to make it without filing additional forms would be for 2022, right? The preceding year of the intended tax year that you want. So it's 2021. It's August. Check the date. It's August 13th. 2021, Friday 13th. That means that you have until March 15th, 2022 to make the S election for the 2022 tax year. And let me say that again. You have till March 15th, right, of 2022 to make the S election for your 2022 tax year. Your first question should be, what about 2021? Well, you're late on the 2021 S election. The assumption is that we're a calendar year taxpayer. The 2021 deadline would have been March 15th of this year, of 2021. So now, it's not the end of the world. There are late elections that can be filed. It's not guaranteed that the IRS will approve it or even the respective states, but please consult your tax advisor, your attorneys, and you can work of the next steps if it is needed and you need it in this year, right? We're in August, so we have several months left of the year. We're already going through the latter half. So make sure you consult your tax advisor, your CPA as soon as possible and discuss what are the steps and actions that you could take to make sure you get that late election filed or whether it makes sense to wait till 2022. And if you don't have a CPA or you're looking for a trusted advisor, please reach out at the number below, 908-543-4716, or click the link, fill out the questionnaire, and get a free consultation. I've given you a background of S Corp versus LLC, the different types of tax structures. Of course, I didn't go into detail because we'll be here not all day, all year, right? So I'm just giving you the baseline so at least you're charged with information that you can now ask the right kind of questions, or you can do your own research. So the S Corp, well, why is it so attractive? Why do I keep mentioning file the S election? Why do you keep hearing it on the news? Why do you keep hearing it on YouTube from friends, right? The S Corp election was made for small business owners. There are a lot of benefits, right? And let's get one thing straight. Being an LLC as a disregarded entity, as a sole proprietorship, or as a partnership, a multi-member LLC, and being as an S Corp, you get majority of the benefits. Sorry to spoil the rumors about, oh, the S Corp is way better. You get majority of the benefits. One of the most attractive advantages of an S Corp versus an multi-member or sole proprietorship is that the S Corp, you get to reduce or sometimes even eliminate what we call self-employment taxes, right? So what is self-employment taxes? Self-employment taxes is Social Security and Medicare portion for self-employed individuals for 15.3%, right? So back to the S Corp versus LLC or single member or multi-member LLC. The S Corp, when you're an S Corp, you essentially reduce to eliminate the 15.3%, right? So let's put that into an example. Showing the LLC sole proprietor single member versus an S Corp, right? The biggest advantage, or one of the biggest advantages, is the reduction or the elimination of self-employment taxes. So this example illustrates that. If we start off with net income of $100,000, and as I alluded to before, net income is your gross revenue, your sales, your revenue, less your deductions. And that's how you get your net income. So let's say the revenue was $200,000, the deductions or write-offs is another $100,000. That's how you get the net income of $100,000. So as a sole proprietor single member LLC, meaning that your income is reported, or your activity, your business activity is reported on your 1040 Schedule C, this is what it would look like regarding self-employment taxes. You take your net income of $100,000, you have your draw of $30,000. One thing to note here, this draw of $30,000, you do not get a deduction on, because what happens as a sole proprietor, if you make a draw to pay yourself, the IRS treats it as a dividend, a distribution, non-taxable. So therefore, you do not get a deduction on that. So your self-employment taxes are based on your net income of $100,000, which at this point, you know it's 15.3%. You have $15,300. That's it in a nutshell. I want you to understand that this does not factor in income, federal income, or state taxes. So what I mean by that is this $100,000, if this was all that your tax return was composed of, your 1040 on your Schedule C, if that's all that was on your tax return, you would pay federal tax rates and also whatever state you're in, if your state has income taxes, and that would be your entire tax liability in addition to these taxes. So looking at the S Corp, right? And remember, the S Corp, you have to make the S election. We'll use the same numbers. You have $100,000 in net income from your S Corp, and this is its own entity. It files its own tax return. And you have, if you notice, a salary of $30,000. Notice the difference between the draw and the salary. As an S Corp, you are required to pay yourself. The IRS requires S Corp shareholders to pay themselves. And what we call a reasonable compensation. Sorry, my handwriting is there. I'm just writing fast. Reasonable compensation. What is reasonable compensation? It's the IRS wants shareholders of their S Corp to pay themselves certain wages that make sense. That's just it in a nutshell. You don't want to pay yourself too low, and you don't want to pay yourself too high. Please consult your tax advisor, your trusted CPA, and you can go over what is the threshold and what makes sense depending on your net income for your business. So for purposes of this, we're going to use 30%, $30,000. So the $30,000, as you can see, the immediate benefit of an S Corp, you get to deduct that $30,000 from your net income. So already that is an advantage, because as a sole proprietor or single member, you cannot deduct what you pay yourself. You just take it as a distribution. So in addition to paying yourself as an S Corp, you also have to pay what we call payroll taxes, which essentially is the FICA and Medicare, which you are the employer and the employee. So the business is paying that, but you get to deduct the employer portion part of it, which is $2,295, right? So the total taxes that this S Corp will be paying in terms of payroll taxes would be the 4,590, but you get to deduct the employer side of it, which is you, but also your company, which you own 100% of at this point. So keeping it simple and leaving the same numbers, but with the added benefits as an S Corp, you have an adjusted net income of $67,705. As you can see, your ending point is different from if you were filing a Schedule C as a sole proprietor, single member LLC. Now, the biggest thing I want you to look at from this example is the savings. As a sole proprietorship, single member LLC, you are paying $15,300 in self-employment taxes. However, as an S Corp, you're paying $4,590 in employer taxes. The difference is a savings of $10,000, right? $10,710 that you're saving. And this is based on this example. This is one of the biggest advantages of switching to the S Corp. You instantly see those tax savings right there. There are other items too that, for example, like the 199A deduction, you get them for both. So I didn't feel the need to show it. And you could spend a lot of time explaining that and how that works. So what we can get from this, again, just to reiterate, you're saving more money as an S Corp, but again, depending on the numbers, the results could be different. And you always want to have that conversation with your CPA, your tax advisor, to make sure it makes sense. And that cost right there, those savings, I should say, outweigh the cost of if you were to file the S Corp return. As I said before, it's another additional filing, which then it has to sometimes pay its own state taxes. So you have to always factor that in, amongst other things that your trusted advisor, your CPA, should be able to, provide the list and brainstorm and game plan with you. As you can see from that example, being an S Corp saves you a lot more money than being a multi-member LLC or a single member LLC. All in all, we've learned today LLC and being an LLC, how you can go about making the S election. So the next question should be, when should I consider making an S election, right? Because you don't want to always just jump the gun and you haven't made any revenue and you're like, well, I heard I'm going to save this much. Well, slow your roll. The right time, or the sweet spot that I've seen just with my clients and just doing kind of an analysis, or just doing an analysis of when does it make sense, is from that 40 to 45 to that $55,000 range of net income. What does that mean? That means your revenue, the income, the money you brought in, your deductions, right? The write-offs that you have, and the net of that. If that amount is around that range, it probably makes sense for you to be an S Corp, or to at least discuss it with your trusted advisor, your CPA. You can go over when it makes sense, right? And it could be a fluid thing. So if you start your business, if this is the first year you're starting your business, you have more of a leeway than somebody who has been in business for quite a while and this is not their first year. One of the things to consider is if you are making, let's say, $10,000 net income, it might not make sense to be an S Corp. And the reason why is it also costs to file an S Corp tax return, right? Federal and state. And in certain states, there are minimum taxes. So if you add all those up, right, less, and compare it to the total taxes you're paying just filing your 1040 as a sole proprietor, you might not be saving as much money. Right? So you always want to make sure you're doing this analysis and you're consulting. Don't do it by yourself. There are plenty of competent professionals out there who can walk you through examples and scenarios and see if it makes sense. And again, it's not just a one-time consultation and that's it. You never make the election, or you make the election. You have to keep it fluid and keep that constant communication with your trusted advisor. So if you're looking to get a free consultation as you start your new business, or you have a existing business and you want to grow, please reach out to me at 908-543-4716 or the below link, fill out a questionnaire, and we'll get somebody over to contact you and we can discuss. Again, 908-543-4716 And if you click the link below, fill out the questionnaire, I'll give you a call. We'll get together and we'll talk about how to make your business better, more tax efficient, strategy, and just being overall tax efficient. So one last time, 908-543-4716. This is Bayan Liadi. This is Keep Tax Basic. And if you liked this video and found it helpful, please like, comment, and subscribe. And I'll see you next time.